Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Lynn & Associates with your agriculture update for this Thursday, the 6th of April, 2017 at 3:55 p.m. Central Daylight Time. Well, today was one of the red days, in other words, a down day in all the grain markets, including the cotton. We've got trade issues coming up right now between China and the U.S. over the next 48 hours. We'll find out how Premier Xi gets along with Donald Trump. Do they get along? What about the gorilla in the room, or the elephant as some people would rather call it, which is North Korea, dumping copyrights? There's just so much in business that has to be discussed. And of course, no one wants to see the protectionism issues get out of control here. So, got a lot to worry about. But as we take a look at soybeans, you can't get away from the fact that with as much supply as we've got coming out of South America, the acreage shifts that are going on in the U.S. supposedly as farmers shift from corn to beans, and as beans have dropped down almost $1.44 in price. That's a pretty big drop. As you go to the daily chart of just closes, you've dropped down $1.15. That's a pretty big drop as well. And this all happened in past 30 days if you look at it. This is how the chart is consolidating right now in the past 5 days or so. We do have a pattern of lower highs, lower lows, which is bearish. To negate that part of the pattern, you got to take out 948.5. As you look at where the other resistance is, it's at the 975 level from the 18-day moving average of closes. The 100 days not in play here because it's all the way up. So that would be one of the resistance points. But to get to it, you have to change the chart pattern. If you're going to look at Bollinger Bands for theoretical support, it's down now at 926 3/4, and it'll probably drop tonight when the market reopens, the way the math is going on that at this point in time. And you have an embedded reading which just says rallies are right now being sold by the pros. When you lose the red line back over 20, the odds favor that this leg, this big leg to the downside, has run its course. It hasn't yet. The meal market's the same thing. You have the embedded reading, which is bearish. You've got the pattern of lower highs, lower lows. 311.30 is a key number. If you take that out, you do change the pattern to then one of potentially higher lows, higher highs, or it could end up with just a lower low and a higher high. But 311.30 is going to be the key number. It isn't all that far away. We're at 308.70. When you come to soybean oil, it jumped in today and converted itself from being oversold to locking in with the bearish reading. Lower highs, lower lows, very bearish pattern. Corn market. I thought, and I know that our firm, which is a big grain firm at Lynn & Associates, they kept mentioning they think farmers were going to sell the 370 level up against the upper Bollinger Band, and my gosh, they did. And now the market's back here. Are we trending, though? Not really. You have a lower low, a higher high. You have right now downside bias because you closed under the 18-day average, but momentum is flat to trying to give us a direction. The wheat market, flat momentum, but now you've got lower highs because today was an outside day down. So I'll be taking this arrow, flipping it over and putting it here, pointing down as of tomorrow. And I think the pros will be aggressive into selling into the 18-day average. If you take out today's highs, be it Friday or Monday, I think that would be the blowout number. I think they wouldn't want to stay short anymore. In the sugar market, it doesn't matter what bullish news it gets. I mean, India yesterday buying 500,000 tons duty-free of sugar, they said, and they weren't going to buy any. That had no real impact. The market's up 35 points, still in a very bearish pattern with an embedded reading. When you lose the embedded reading, the odds are just like back here when you lost it. You make a run for the 18-day average of closes. Until then, trend is down. Coffee market, oversold, lower highs, lower lows. I'll be getting rid of that arrow pointing up tomorrow. And in the cocoa, if you take out 2065 on the July, it's a failure on this rally. but not trending. This market has to get up and over immediately yesterday's high, not today's, to be good, otherwise it's in trouble. In the cotton market, you are running the lower Bollinger Band with an embedded reading. That's very bearish. The first big support's here at 74.43. You missed hitting it today by 5 points, which is nothing. We'll see how it acts when it gets there, but there's nothing friendly on that chart. In the meat markets, you're oversold in the live cattle. So as a trader, you look at that and go, do I want to play while the market's oversold? The trend is down. Resistance comes in at the 110.50 area. Feeder cattle are not oversold, just sort of flat momentum here. The market was downside bias with a trend down. The higher close today puts the market neutral. It doesn't turn the trend of the market in any manner. It gives it upside bias. And in the hogs, you are still very much in the bear camp with the stochastics embedded. If they lose the embedded reading and keep it lost tomorrow, that could be a sign that the market has made a short-term trading bottom here. You're still under that 18-day average, which offers a lot of resistance on that chart. Now we write galore on the grains, the meat markets, all these different parts that you see, and you can pick and choose our information. It's delivered into your mailbox and or our QT platforms, which are both mobile, they're made for a tablet, and of course for your desktop. This is what our clients get. You can't buy it. You either get our research as a subscription through me, my daily research, or you have a trading account with Lynn & Associates. To get it, call us at 866-973-2077. You can go to our website at www.iraepstein.com, and you will see when you're on there our carousel of free offers on our homepage. Click on it, a form will appear, fill out what you want, we'll take it the rest of the way. Or right up here, if you're watching me off a YouTube video, use this, put it in there, and away you go from that. I'm Ira Epstein. You have yourself a good day, and I'll talk to you all tomorrow.